Hello everyone, welcome back to another FinMeUp Weekly Stock Watch, where we cover the most important stock market news that happened on the JSE and a bit in the US. Thanks for watching, thanks for subscribing, we really appreciate it, and we hope you get a lot of value in a short period of time. The first company, Capital Appreciation, also well followed on FinTwitter. It is a small cap on the JSE. They only posted a trading statement, so we can't give too much insights or opinions on this. It's only a trading statement, not the actual results. But their earnings per share is expected to decrease between 44 and 45.5%. Okay, so that is a big hit looking from the outside. The main reason for that is GovChat, a company called GovChat. And it's basically just, the only thing that's left is the IP that they already created. But the thing is, the IP that they created, I don't know really how much IP is in GovChat. So it looks like they're going to be liquidating GovChat and, writing this off as a loss, the loans they made to GovChat. So that was definitely not a great investment from Capital Appreciation. But we'll get more details once the actual results are out, as well as how the other businesses are performing. So stay tuned for that. We'll cover that in a weekly stock watch when the results are out. The next company you probably heard of or you shopped at, and that is Spar. So we're going to touch on two retailers today, three actually: Spar, Tiger Brands, and Pepkor. So Spar's earnings per share is expected to decline between 25 and 35%. That's a massive decrease in earnings per share. Spar reported a 7.9% increase in turnover. The grocery and liquor turnover increased by 6.5% in Southern Africa. Grocery sales growing by 7.9%, but tops at Spar liquor sales declining by 1.9% due to high sales in the prior comparative year. In Ireland and Southwest England, they recorded strong performances, so that area is doing well with an 8.8% increase in turnover. Although their Switzerland operations, where they used to do very well, actually declined in turnover by 4.3%, primarily due to volume declines. And then also in Poland, it is a 4.9% increase in turnover. So they're actually quite diversified geographically. Load shedding, once again, had a massive impact on a retailer in South Africa. Obviously, that impacts the profitability, and it comes to no surprise. But they had additional costs of 700 million rand. 700 million rand for load shedding. That is crazy. Paul, what do you think of these results?
Man, Higgo, 700 million in load shedding. Just once again, a retailer that's heavily impacted. That just really sucks for them. And the thing is, they have no choice. It's this or, the other side is a much more of a disaster. So it's one of those things. I also quite like the 1.9% decline in liquor sales. I don't know what happened last year. Maybe it was post-COVID. Everyone was happy to see each other again. But anyway, so the main one, your earnings per share decreasing by between 25 and 35%. That's quite a hit. The market had a negative reaction to these results. It's down 6%. Then now back to 2011 levels. So, I mean, in 12 years, you are basically flat. Yes, okay, you get a dividend yield of about 4-5%. So that's like a bond, a low yielding bond, but still not great. Down for the year 33%, and over 5 years 48.5%. So Spar really struggling. So maybe one remark, maybe something interesting, as the Spar retail shops isn't actually owned by Spar, the listed company that we discussed now. So the Spar retail shops, they're owned by individual owners. So maybe you and I have a Spar somewhere, and then we source from the mothership, the Spar listed companies. They're more like a distribution network. So I can decide, okay, 90% of all my stock in my Spar comes from the Spar distribution center, and the other 10% is like local cook and tikis and whatever, local bread or whatever I want to do. And also a big reason for these results is Spar, the listed company, the mothership. They have a new operating system, a central computing system. They call it the ZAQ system. And this system took a lot longer to install and way more expensive than initially anticipated. Now the devs like Isaac in our team, he can maybe tell you a bit more, but basically to migrate all the data from the old system to the new system was a costly exercise. So that's also a reason why things didn't go that well. And lastly, once again, load shedding, 700 million rand. That is crazy.
Let's look at another sort of retailer. They are in that industry, not a retailer directly, but their share price also took a hammering this week, and that is Tiger Brands. Revenue increased by 16%, but revenue growth was driven by price inflation. So all the South Africans out there, you probably saw what we are experiencing with inflation. Toilet paper that cost a year ago, potatoes, onions, you name it. It is so much more expensive today. So the revenue growth was driven primarily by price inflation of 17%, but was offset by overall volume that declined 1%. So there was actually a bad year. The volumes declined, but the revenue growth that looks good was actually due to price inflation. Cost of load shedding, once again, declined their gross margin from 29.2% to 27%. So they actually had a lower gross margin. Group operating income decreased by 9%, and the earnings per share increased by 2%. So fortunately, there was a little increase in earnings per share for the year of Tiger Brands. Paul, any thoughts on these results from Tiger Brands?
Once again, they go struggling. So Tiger Brands have one of the biggest manufacturing retail businesses in South Africa when it comes to food. They have about 10 brands that's over $1 billion rand each, like the Old Gold and Koo and all of these. And so you can think like the inflation here is the main variable, 16-17%. So due to the war and post-COVID supply chain, all of this, food inflation is a lot higher. And because your input cost is now a lot higher, you kind of have to decide either you internalize that higher input cost or you pass it on to the consumer. Now, when it comes to food, margins are already very tight. I mean, you can't, if you're Pick n Pay, Woolies, Spar, or Shoprite, you can't increase your prices too much because the type of business is someone will just go next door and buy it from them. So they kind of have to internalize that, which sucks for them. And then, all manufacturing businesses are struggling due to high inflation. And retailer, you and I, the customers, what can we do? We're having lower disposable income, higher interest rates, higher inflation. So it's just one of those things. This is where the people is going to cut, unfortunately.
Now for something more exciting. Okay, so that is once again Renergen, but this time it's actually not a big news announcement or discovery. It's actually results. Revenue increased by 381%. Okay, so sales increased by 381%. Sounds huge. The thing is, this company is still at what, a 2.8 or 3 billion rand valuation. But the revenue, even though it increased by 381%, it only increased from 2.6 million rand to 12.7 million rand. So that is still like a more than 100 price to sales ratio. So the revenue is still not something to look at if it's just nothing compared to the valuation. The Renergen story is still in the early days. It is still, you bet that the exploration will be successful and that phase 2 will start pouring in revenue and money. So, although they posted revenue increased, for me, it doesn't really mean anything. The loss per share decreased by 28.4%. Once again, just lower expenses, a little more revenue, but these results still don't really mean anything to me. It's more important that you, as invest in Renergen, read through their progress updates. That will give you lots of insights. Part of the dog barking, as you can see, this is Hazy. So you can greet Hazy. I've mentioned her before. We are launching our pet insurance product next week. It is called FinMeUp. We're very excited about it. She's insured through FinMeUp. We are going to have a cool Instagram page for that. We will share lots of cool videos and photos of dogs and cats. So if you have a dog or cat and you have cool or funny or cute videos, please just say something in the comments. Then we can reach out to you and you can send them to us and we'll post that. And also, if you are looking for pet insurance, stay tuned. It takes you less than a minute to get a pet insurance quote. So it's really, really seamless. Can't wait to share it. Anyway, enough of Hazy. Renergen, my current thoughts, it's in this environment, they have to take on a lot of capital. They have to take on a lot of debt. At the moment, investments, liquidity is down. There's more skepticism around growth companies, around unprofitable companies. around exploration companies. So it's not as easy to raise funding as it used to be, although their CEO is a deal maker. We've seen quite a lot of deals happening with Renergen. And the thing is, they also want to take on a lot of debt funding, and they already have some debt. But with the current environment, if this environment stays for too long with high interest rates, we might see that debt actually maybe just be a little too much, depending on how long these interest rate environment stays, and also how long it takes for them to actually start producing bulk revenue and bulk sales of their gases. So for me, still very early days, still a lot that needs a lot of water that needs to cross the bridge. So currently I don't own any Renergen in my personal portfolio, although my wife does, so indirectly I do. But definitely still an interesting company to watch with lots of potential, but lots of risks as well. Any thoughts, Paul?
Completely agree with you, Higgo. Maybe I'll just echo what you said. So firstly, these results, for me as well, it doesn't really mean anything. 12 million, 2 million to 12 million, percentage-wise, that's a massive, that's a massive increase. But if you just put it in absolute terms, 2 to 12 million, it's the same. It's nothing to write home about. It's a little bit of a buyer beware scenario. It looks amazing, but just look at it on an absolute basis. And then I completely agree with you. If you're serious about Renergen, then you must follow their roadmap. Look at the production updates. That's way more important at this stage than the actual results that they're going to post. Revenue and all that is not that important for now. So look at the roadmap and then hold them accountable. Are they sticking to the roadmap? These promises that's being made, are they being fulfilled or not? And if it's a yes for you, then go for it. If it's a no and you see orange or red flags, maybe just take some off the table. Just on that note, so on our stock pick challenge, about 500 people playing, Renergen is the most picked stock, 117 odd. So most of our community, are investors in Renergen. So guys, be careful and follow the updates. That's the knowledge is power in this case.
Yeah, and the last comment on Renergen, this is a company with high risk, but also potentially a lot of high reward or no reward. But the thing is with investing, there's a lot of opportunity, even in boring companies. Paul interviewed Charles Bueta on a Stock Savvy episode on this YouTube channel, where they covered Caxton in detail. And one of the comments that Charles made was,
a rand made from selling newspaper ink, printing newspapers is the same as a rand made from artificial intelligence, in my opinion.
There's also boring opportunities in the market. There's always opportunities in the market. We just have to find them. So it doesn't need to be this exciting stuff. As we saw Thungela, 2.5 years ago, they're a coal producer, and their share price rocketed when it was just the right timing, buying an undervalued place. So you don't need to chase exciting names in order to make exciting returns. But obviously, the exciting names usually do very well or very bad. So just keep that in mind. And let us know in the comments if you want us to cover Renergen's updates as they come out for the phases or discoveries or anything like that. Let us know in the comments if you would want that. Lastly, on the retailer side, Pepkor, another company that we know well, Pep Stores. So their revenue increased by 4.3%. Earnings per share decreased by 10%, which is not a surprise in South Africa at the moment. Avenida business in Brazil performed above expectations. So there's a lot of big opportunities in Brazil. It's going to be very interesting to see how the management executes that over the next 3 years. The opportunity is massive. Let's see how they do at that. 168 new stores were opened, so definitely expanding the store reach. Continued progress in their portfolio optimization, so taking what they already have and just improving that, upselling, cross-selling, and just optimizing generally. Their performance was negatively impacted by constrained consumer environment. So as we know, they target the lower LSM, cheaper clothing, cheaper products, so that it's more affordable. And also another, once again, challenge is electricity load shedding. Pep Africa reported good customer growth and improved profitability. So interesting results from Pepkor. Paul, I know you're quite a fan of Pepkor, or you have been in the past. Are you still a fan?
This is one of my favorite companies, almost like a shop, right? They're just brilliant operators. Whether I'm invested in them is a story for another day, but the company as a whole, massive fan. Obviously the biggest retailer in the clothing space in South Africa. They have many brands, Pep, Ackermans, and many more. And the big well, the exciting news for a company like Pep that's already this big is the expansion into Brazil. So that's something I'm really keeping an eye on. They have a massive economy, much like ours. Like you said, the middle and the lower class, they're just much bigger. So if Pep, but that's going to take many years. This is not something that's going to, happen tomorrow. So that's going to take many years, but that's very exciting. And yes, okay, the share price did take a little bit of a hit, especially the last year, but that's a function of economic conditions. I mean, what can you do? We are in a recession. They are targeting the middle and the lower class. These are people with lower disposable income, and high interest rates, high inflation. Once again, what are you going to do? You're going to cut on clothing. So that's not a big worry for me. That's just something that it's a function of the economy. When things return back to normal, then Pep will start making a little bit more money.
Yeah, I mean, just looking at Pep at the moment, so they are trading at 14 Rand 70 cents. They are on a PE ratio of 9, a dividend yield of 6.7%, so you're getting a nice juicy dividend. PE of 9 is really below the average retailer that's listed on the JSE. Plus, you have the exciting growth aspect in Brazil, so it's almost a value play, but you have an element of potential growth over the next few years. So it is an interesting company, maybe something I want to look into deeper as we go on. Then lastly, on the JSE, Santova, once again, I'm a massive Santova fan. It is my largest position. It's been my largest position for quite some time. I've posted about Santova more than anything on the FinMeUp app. But their directors actually bought shares this week, over not a huge chunk of shares, but I mean, directors can sell for many reasons, but they usually only buy for one reason. And they bought over 1.5 million rands worth of shares. So that is definitely a positive sign for me. Just part of Santova. So they posted their financial results. They also have an investor presentation on the 6th of June, which I'll be attending with big eyes. But we are going to do an episode on Santova on this channel, Paul and myself, a deep dive. It's going to be a longer episode, but you'll really, really understand where Santova is at and where they're going and where they were after watching that. So stay tuned for that. Also, just on Paul, he launched Wealth Wingman. Paul, can you just quickly tell us what Wealth Wingman is?
Yeah, I go Wealth Wingman. I'm so stoked about this. It is my newsletter. It's going to be only a monthly newsletter, and later on I'm looking to do it bi-weekly. And it's basically cool finance insights. So in the first installment, what you'll get is 3 sections. The first section will be the market movements of some of my favorite and the biggest indices in the world, like the JSE Top 40, the All Bond Index, SA Property, MSCI World, for those of you who's interested in that, the NASDAQ, taking all those indices over year to date, 1 year, 3 years, 5 years, and 10 years. So you can actually see how they perform relative to one another. That's the first segment. The second segment is about the richest people in the world currently and where our South African representatives fit into that structure. I think the richest, just maybe a hint, the richest people in South Africa or institution is the Anton Rupert Trust, and they are, I think, 136th in the world overall. And then the last segment is a nice educational nugget for you, something I wrote about financial freedom and maybe tools that you can use and steps that you can follow to get there one day. So super stoked about that. Look forward to that. Every month it's going to be something interesting and a quick read. It's not going to keep you busy for half an hour.
Yeah, awesome. Looking forward to that. Remember, FinMeUp, we talk a lot about stocks specifically and investing. But we want to be your personal finance companion. We want to be your trusted partner for your finances. That's why we're launching products like pet insurance. We've launched FinMeUp home loans. We can get quotes from various banks. We've launched financial advisors, where Paul is actually my financial advisor. And we have lots of chats around tax, around bonds, around other stuff as well. So you in the community need to let us know in the comments on these videos, what do you want us to talk about? And then we can look at that and share insights on that. That's the best way that we can also add value to you. We don't want to just talk about stocks. We want to add value to your financial journey. So let us know in the comments what you want us to talk about. You can book a call with Paul. The link is in the description. Ask him your financial questions, get some insights, look for some advice or input. And also, if you want to sign up to his newsletter, to the Wealth Wingman, the link is in the description. A final nugget, just one little comment from the US. AI. Nvidia has announced it is building Israel's most powerful artificial intelligence supercomputer to meet soaring customer demand for AI applications. We saw an amazing keynote from Nvidia CEO. We saw all their exciting announcements, how they are changing the world. They are the first, basically, semiconductor company that is the booster of AI to reach $1 trillion valuation. I think the valuation is a little stretched at the moment, but at least it's exciting to watch. Thanks for watching this episode. Consider liking if you got some value. Subscribe for more for the stock savvies coming up, the weekly wraps coming up, and looking forward to the pet insurance, the FinMeUp launch next week. Can't wait. Thanks for being part of it. Hope you have a great weekend. Cheers.